In 1981, a psychology experiment proved that humans are far more terrified of losing $10 than they are excited about winning $10. We hate losing. It is wired into our DNA. And yet, every single day, millions of people willingly walk into the biggest financial trap of their lives, completely convinced they are winning. They sign a piece of paper that locks them into a 30-year obligation, all because of a single phrase we have been fed since childhood. Rent is throwing money away. It is the great housing lie. Let us look at two people, Sarah and Michael. They are both 28, earn the exact same salary, and live in the same city. Sarah buys a $400,000 house, scrambling together an $80,000 down payment, scraping her savings to the bone. She feels an incredible rush of dopamine. She is an owner. Michael decides to rent a similar apartment down the street. His friends tell him he is flushing cash down the toilet. But here is what happens over the next 10 years. Sarah's mortgage is $2,000. But human psychology suffers from ownership blindness. The moment we own something, we ignore the costs required to keep it alive. Sarah forgets about rising property taxes, insurance, and the night the water heater burst, costing her $3,000 in cash. In real estate, there is a golden rule. Your mortgage is the absolute minimum you will pay every month. Your rent is the absolute maximum. Meanwhile, Michael pays $1,800 in rent. He takes the difference, plus the $80,000 he did not lock away in a brick vault, and puts it into a simple stock market index fund. When his sink breaks, he calls the landlord and goes back to sleep. Imagine buying a house is like planting a massive fruit tree. Everyone sees the equity growing on the branches. What they do not see are the gallons of expensive fertilizer and hours of grueling labor required just to keep it from dying. Sometimes the cost of the fertilizer outweighs the value of the fruit. When you pay a mortgage in the first 10 years, you aren't actually buying a house. You are paying the bank for the privilege of borrowing their money. In the early years, roughly 70 to 80% of your monthly payment goes directly into the bank's pocket as pure interest. It vanishes. It builds zero equity. Sarah is throwing away just as much money as Michael. She is just throwing it to a bank instead of a landlord. Why are we so desperate to buy? It is because of our deep ancestral need for certainty. Thousands of years ago, a fixed shelter meant survival. We confuse a volatile financial asset with physical safety. The real estate industry understands this perfectly. They don't sell you interest rates, they sell you memories, playing on your deep-seated fear of instability. We also suffer from the endowment effect, the tendency to overvalue things merely because we own them. When you buy a house, it becomes an extension of your identity. Because you love it, you assume it must be making you rich. But there is an invisible, devastating tax that homeownership extracts: the loss of human agility. If you are Michael the renter, and you get a life-changing job offer in a city 12 hours away, you pack 2 suitcases, give 30 days notice, and step into your future. If you are Sarah the homeowner, you are anchored. To move, you have to hire an agent, pay a 6% transaction fee, which wipes out tens of thousands of dollars of equity, and pray the market hasn't dipped. In the modern world, wealth is not just a bank balance. Real wealth is options. A 30-year mortgage can easily become an anchor that locks you into a specific career path, simply because you have to feed the house. The house stops belonging to you. You start belonging to the house. When you tie up all your liquid cash into a down payment, you experience opportunity cost. That money is trapped. It cannot be used to start a business or take a 6-month sabbatical to heal from burnout. We are led to believe real estate always goes up, but history shows that when you adjust for inflation and maintenance, it grows at a very modest pace. The stock market historically yields significantly higher returns, but an index fund is invisible. You cannot show it to your parents when they come over for dinner. We sacrifice massive future freedom just to satisfy our current ego. Should you never buy a home? Of course not. But you must recognize it for what it truly is: a luxury consumption decision, not a guaranteed wealth-building investment. If you want the stability of knowing you won't face a lease termination and you are ready to stay put for a decade, then buy the house. But do it for the lifestyle, not the return. And if you are currently renting, stop feeling guilty. You are not throwing money away, you are paying for shelter, alongside a highly valuable asset called total flexibility. Take the money you save on repairs and interest, and discipline yourself to invest it consistently elsewhere. Don't let an old manufactured societal script convince you to trade your life's agility for a stack of bricks. True security isn't found in a piece of property. It is found in having options, control over your time, and the freedom to walk away.